Okay. Hello, hello, hello. Let me see what other things I can close here. Um, Just getting myself organized. Hopefully somebody can hear me.
Yes, I can hear you.
Okay, someone can hear me. Brilliant. Thank you so much for coming. Okay, so you know, kind of an interesting thing. 2024. I came in out of 2023, and I had a good period in 2023. So I thought myself, that's it. I thought, okay, I had a good period. That's it. I need to just kind of ride this out, see how it goes. And 2024 has been obscene. And, you know, it just, I find it crazy how excited investors have become. And I like a lot of investors. I kind of look a lot to what how Warren invested. And what I find quite interesting is at the back end of his partnership years, I could be wrong on the exact date here, but I think it was 1968 that year, might have been 1969. He closed the partnership, he took out a large bank loan, uh, and that coincided with a period where small caps investments, small cap stocks were really hot. And he took out a large cash investment, closed his partnership, and he, to the best of our knowledge at least, didn't do a great deal of investing in those 2 years until 1972. And obviously, that should ring some bells with some people, if particularly if you're of an older age. That was a period where the stock market was particularly down, and that is really difficult to do. It's really difficult to do that kind of have that discipline. And I'm not Warren, obviously, but I think that you can still look back at that period, and as much as you can as a human, as a mere mortal, try to think through that. When we have a difficult period in the market for, let's say, um, like a few weeks, people are losing their marbles. I see that people are like, oh my God, things are going crazy. But it's actually more crazy to talk about restraint when everybody's going crazy to the upside. And I got a lot of comments about my decision to sell Saracen. I had a price target of 12 for uh, looking out to early 2026. And that got pulled forward considerably. And a lot of people say, "Oh, I'm never gonna sell Saracen now." And I'm like that's not how it works. This is not how it works. You have to understand that in investing, the most important thing is to try and protect your principles. Really, really, really important. But once that becomes like, for example, for me, I feel myself. I'm sorry if I'm repeating myself, George. You've heard this like a million times. George, thank you for coming. I know it's a bit early as well. Um, for me, I always think about the number of hours I've had to work for that sum of capital. You know, I work hard. I'm sure you people on the call work hard. And like the amount of blood and sweat and tears and frustration and anger that I've had to work through to accumulate that capital, I see it as a duty to myself and to my family to protect that capital. Once you see it in that kind, for me, it works like this, I think about time, like that's the allocation of time that I'm investing. And I recognize that by definition, an investment means an uncertainty. Okay. So you're making an assumption on on organic substance. I think of it like a wave, okay? So the whole world is organic, whether we humans, trees, whatever business, it's an organic entity. It's growing and shrinking and moving, and there's no certainty. So you're making an investment in an uncertain environment, and you've allocated those number of units of hours of hard work that you put into work. Um, so coming back to Saracen, yeah, people were not happy that I recommended to sell that. But for me, I'm thinking in my mind, okay, listen, I am trying to compound the subscribers' portfolio at north of 15%. I think myself, okay, let me move the subscribers' portfolio. Doesn't matter what I do. Like, that's no here, no there. What matters to me is when the people that subscribe, their portfolio that from my stocks going up at 15% per year on average. And when that return or that price target gets really dramatically pulled forward, I'm like, whoa, I've just like made this one investment work out really positively. Even if in my mind I'm always thinking a person should invest at least 5 stocks. I'm like, even if the other four, like nothing really happens, that one worked out satisfactorily enough to compensate for nothing with the other four happening. So in my mind, I'm always trying to think about that protection. I'm always thinking about those hours. I don't know if like any of you have a particularly way of thinking about this, but for me, this is like something that is really, really important to me is the number of hours relative to that investment. And I feel like it's so much better to walk away with the return plus your original principal. And a lot of people kind of get confused with this, but I say that when you buy a business that is growing in profitability and you buy it cheap enough, you don't need to be a genius to know like how things are going to work out in the future. It's like, okay, I kind of have a vague idea. And I wrote, might have been, I don't think it's from around New Year. I wrote in one of the messages, I said that in 2025, the only investor is going to have any chance is that one that is humble enough to recognize that she doesn't know everything. So when you buy something that is cheap and it raises in price, the more it raises in price, the more certainty you need about its outcome. And I just feel like when something like in example Saracen crossed beyond $12 and it reaches 19, I'm like, do I really know so much about this company that I can underwrite it into next year? I'm always thinking, would I buy this at this point in time? If I'm willing to buy it, then I'm happy to underwrite it for another 12 months. But if I'm not willing to buy it, I can't expect someone else to buy it. So I better just walk, because if there's not going to be someone for me to sell that's willing to buy, then it's just going to free fall down. And I don't want that because I don't want to lose that time. And I just think a lot about this aspect, and I think a lot about the improvements that I need to make in 2025. Made a lot of mistakes in 2024. Some names I still own. For example, Sentinel One is a business that I've for a long time felt that is worth $40, still 22. That's something that for the facts for what they are has been a mistake. I know Enovix is up a lot today, but generally speaking, this has not been a great investment. I think about GigaCloud Technology. I think about businesses like that where I kind of feel with all my conviction and might and patience that they're worth more, but the market is unwilling to pay what I think is a reasonable price. Now, again, that aspect that I've been talking about already several times is about the element of time. So I've been recommending Enovix for like coming on to 2 years. That's time, right? So if a person is not making money on that, that's dead money. And that's how I think. A person needs to see a return, and I need to be humble enough to say, hey, I think this about Enovix, or I think this about Gale Cloud Technology, or I think this about DraftKings, but the market as a whole, I've given it enough time, and the market doesn't see that. So the way that I'm going to approach this is businesses that I'm kind of shaky on. For example, DraftKings, I am going to recommend when the earnings come out. I think these small caps, I think they come at the end of February. Yeah, I think it's around the end of February. I don't think it's early March, but it might be at the end of February. These businesses that I'm kind of like, they're not really delivering what I think that they should deliver. I'm just going to say, okay, I'm going to take a break from this. Clearly, I'm seeing something that people are not seeing, and take a clean break. And this is not contradictory with being patient. I've been with these businesses for over a year, but I just want to take a step back and then see how things are. It's like take 6 months out from that and see if something else, that I missed something or something. Um, and that's really it. That's all I kind of really had to speak about today. It's really, really important to have that understanding, what I said many times already, to have a vague idea that you don't know. This is so precious because I believe that it's really difficult to teach another human being an idea. I have this belief that you can only learn a new idea when you're fighting for your survival. I come with this kind of thing that I've said that adversity is a separator. So it's only like I feel like if you look like at an oak tree, that wood is really strong, really, really strong wood. And that's because the roots have to go really, really deep down. And you see other trees that the roots kind of just stay around the top and they're just rubbish wood. So that adversity, that being pounded and being destroyed, is only in that point of adversity that you can make a choice and you can say, listen, this is how it is. I'm not happy. I talked about it in July and August. This is how the performance is underperforming, and just said this in July and August. And I'm not happy. And only when you've been through that adversity, at that point, if you're willing to think that you don't know and you have more to learn, only at that point of adversity can you learn a new idea. Because when the market is very favorable, it's difficult to learn your mistakes. So it's only when you're looking at the pit at the bottom and everything is just killing around you. And that point when you kind of try to dust yourself off and try to get back up, only at that point can you learn a new idea. And with that bleak um, outlook, I'm going to open it up some questions if anyone wants to ask any questions.
Hi, Michael. Lester Clark here. I just joined the group over the weekend, so I guess my main question: what do you normally speak about on these webinars?
Mm-hmm.
And I'm busy sharing some ideas as well
Mm-hmm.
on the chat that I'll get back to everybody on. But just really on the format and any
Yeah, the format,
how to see things going forward.
yeah, the format normally is that I kind of explain my ideas in kind of broad strokes for about 10 minutes or so, and then I open it up to some Q&A. And in my experience, speaking objectively, the Q&A is the most value-added aspect, that people ask difficult questions, and I try my best to give the two sides of the answer, and I try my best. Ultimately, the only thing I'm really ultimately the whole ultimately what I'm doing is I'm just giving a person a little crutch to say It's going to be okay. That's all I'm doing. Because when the market is hot right now, like, doesn't matter. This is pointless, wishy-washy. But there will be a time next week or in tomorrow or even this afternoon where it's going to start getting bloody, and it's going to be more blood and more blood and more blood, and it's just going to be a complete calamity. And people ask questions like, oh, for example, Gig Cloud Technologies, the business hasn't worked out for me that well. People say, oh, Gig Cloud is down, like why is that? Or insider selling, or there's a short on it, or whatever. And I say, listen, it's going to be okay. The business hasn't got a lot of debt. In the case of the Gig Cloud, it has no debt. But just for the sake of discussion, I'll say, listen, the business has this amount of debt. It's going to be okay, and we're going to make it. That's really that's the only thing I'm doing. I don't provide anything more insightful than that.
Okay. Are there any stocks in particular at the moment that you'd recommend me having a look at first?
Yeah.
And maybe asking questions on?
Yeah. So every Monday before the open, I write in the chat facility. I write. I think you and Seeking Alpha, is that right? Yes, yeah. So on the dashboard on the left and the new members only, there's like a little link. You can click that, and it highlights 5 stocks that I think are worthwhile buying right now. And this is kind of like something to kind of add inspirational ideas to somebody. These are always stocks that I own, and they're already part of deep value returns. But I just kind of put it there just to highlight to people, hey, have you remembered about this? So just oftentimes the names won't change a lot from week to week. Sometimes it completely changes the 5 names. So the one that I did before New Year's was actually Saracen was one of the 5, but that was just luck. That was not that I thought blah blah. I try and kind of put 5 names that people say, hey, listen, this could be interesting. So I highlighted one name I had those 5 that I put down. But for example, you'll see I put Asana down yesterday morning. And you can kind of go, another one that I really like, but I know that the market doesn't like, is Teladoc. I recommended this coming on 2 months now. I think, I don't know what the share price is now, but I think it's around 10. I recommended around 10. And this is a business that I like because it's not, this is the thing, right? So when you look at an investment, you have to think what you're buying for what you're getting in return. So ultimately, what you're buying is the future free cash flow of that business. So in the case of, let's say, for example, Teladoc, it trades at about approximately 8 times free cash flow. That means if over the next 8 years, the business remains stable, it never increases prices, in 8 years, after 8 years, the business is free and you can keep it for infinity. Now, if they're able to hypothetically increase their prices, expand their offering, go overseas, perhaps they're able to start growing a little bit. And if you grow, you get a re-rating. I call that a change in perception. So if you get a change in perception, you get a re-rating of the stock. And that is generally what I describe inflection investing. It's really trying to get a narrative that's just bubbling away and the surface, and you get a good result one quarter, and people are like, actually, what? Teladoc's still around. And people are like, oh my God, blah, blah, blah. And the stock moves relatively quickly as people change the perception. Now, what's important is to think, like I explained at the start of the call, that perceptions change like the wave. So it's all liquid, right? So it like a wave, it kind of goes backwards and forwards. You can think of it like a share price, like narratives kind of surface and come away, surface and come away. But, like the share price doesn't go up in a straight line. Although looking back in hindsight, you look at a stock like Netflix over the last 5 years, it's just a straight line. But 5 years is a long period of time, and it does in fact oscillate quite a lot. So in the case of, let's say, Teladoc, I say, okay, yeah, I've been recommending stock for 2 months. My typical holding period is about a year. So I believe you will look back at the end of November 2025, so the end of this year, 2025, and I believe that you'll hit a share price of 15. And a person will look back and say, oh, if I'd bought it a year ago, I would have made X amount of money. But it will look easy, but it's not easy. It's really, what I said, well, I asked, what do I tell people? I tell people it's going to be okay. Just stick with it, because people like to buy when they feel excited, when the market's hot. But that's not how you make money. You make money actually the majority of the time by just, sounds dumb, but just doing nothing. I know it sounds like a cliche, but it sounds dumb and whatever. But really, um, the money that I make is really just by doing nothing. I do the hard work. That's the preparation. Like I think of it like going into a fight. You kind of prepare. But once you're in the ring, like that, there's don't need to worry about. Like it's all the preparation that kind of went into it, and then doesn't really matter after that. But you have to do the preparation in so that in your mind you have the stamina to go through that adversity, because that adversity will come. So it's whether you prepare for it or not. It's really that what it boils down to. Yeah, sorry. So I kind of waffled on a little bit, but that's basically how I think about.
I get it. I have the same sort of thought process, so I'm absolutely aligned with you. Thank you.
Thank you so much. Yeah.
Hey, Michael, this is Haji.
Hello, Happy New Year.
Thank you, Happy New Year. Sorry, I missed the first half of the meeting.
Don't worry. No, it's fine. It's fine.
I'm not sure if you covered it, but I have a general question for you. Thank you for the 2024 performance. We had an awesome year in the bull market. Everything was great. And you're in constant improvement. And I know like you don't like to overpromise, but there any change on your strategy for the 2025? Or, like within the last 2 years ahead, the S&P 500 was performing pretty well. And what should we expect? Again, it's hard to predict the future, but in 2025, what should we expect as a DVR subscriber? I mean, are you still want to stick with 15%? And if it's better, we'll be happy.
Yeah.
So is there anything change?
So I mean, it's a bit misleading this fact, but I'm gonna kind of again, this is completely misleading. But 2024 was obscene, and nobody can predict how 2025 will be. But I generally feel that a person that expects more than 15%, I'm not going to be able to do that. I can't. I just feel like, I don't know how long you've been investing for, but it's not that there's a memo that goes around and says, oh, it's all going to slow down now. It happens, and it's just like 3 weeks, and you're just like, oh my God, you go white. I don't know if you've had that experience. Like it's just, you are white, like it's just your stomach's dropped. You're just like, and you look at it, and you've been obliterated, and you feel like, okay, this is a buy the dip moment. I'm gonna sell my t-shirt, I'm gonna go with it, yeah. And that is not even the start of it, because for another year or so, it's just gonna be blood after blood after blood. And you've kind of gone all in thinking that you're a hero, and you're way too early. So what I feel that is really, really fair is, and it's difficult, you and I have talked about it, it's really difficult to lower a person's expectations when things have gone so well. But this is like Charlie Munger says, the key to life is low expectations. And it's really, if you lower expectations, you're going to be quite happy. I know it's not the answer you wanted, but yeah.
Thank you. Thank you. Appreciate that.
Any other questions from anyone? Any other questions? No.
I may ask one more if there's no.
Yeah.
I read your Inavix ENVX article this morning. I mean, quickly read it. So you accept over there that, I mean, your initial, maybe if I understand you're right, your initial entry point was, like it didn't move well so far, but you're expecting it to grow, like once they start having a customer. So is that mean that, let's say that if we have a cash, should we park again up to 5%? Should we park to ENVX? Since
I really feel so. I've had my average price I was looking today was $14, and I don't know if George is still on the call. I can't see it's quite a few people on the call. I every Tuesday I go for my little run. I think about George because George has been like super loyal with me, and he's been here from the start. And I feel myself like I was running in the park, and I feel myself, man, I've been recommending Enovix to George since like goodness knows or whatever. My average, I suspect his average price, if he has it, is around $14. Um, and I thought to myself, my God, 2 years I've been with this dog and I'm still underwater. I was like, oh, damn it. I was like, how is it possible? And I thought myself, okay, whatever. And just before I come in the call, like a lot of people, I just looked at the share price. It was up like 15%, 20%, whatever. And I thought, wow, like how quickly in a few hours a perception changes, right? That I'd gone for my jog in the morning because the hour difference here in London, and already did all stuff. And I come in and it's like, this is crazy how in a few hours then that narrative changes so quickly. You see that? So that's why I detest selling a stock outside of earnings because it's like you're being blindfolded, right? It's like you are like trying to make a guess on a poker table where you don't see your own cards. Like, how can you do that? But when you have the earnings, even if I've been in situations where the earnings have been abysmal, and because the share price has been going down so much, there was actually a relief rally, and I was able to get out, and I didn't lose that much capital in the end. So it's really important to try to be patient. So about Enovix, so I've had this 5%. I've had it for a long time. It's been a massive drag on my performance, but I've said that at the end of this year, I do believe they will be ramping up revenue. So there was an announcement today. I wrote the article this morning, but a few hours later, there was an announcement that they have a customer. They're now with pre-selling some batteries into that to see how things go. So yes, I do think that we will have a very different discussion about Enovix in 6 months. I think that, but is a person able to be patient? That's the key. Yeah. Hi, Natalie.
Thank you.
Hello.
Yeah, hi.
Hi.
Happy New Year.
Happy New Year.
Thank you so much for your wonderful recommendations. I actually protected my Enovix and also my innovation. What's it called? Machines. By putting stop losses, and that way I could buy in the dip and add, and now these stocks are recovering, and it's just really, really good. Thank you so much for stocks I would never have found in any other way. So I was wondering, what's your take on Asana right now and Sentinel?
Sentinel one.
Yeah.
So I'm very bullish on Asana. I feel I like these businesses that don't have that much growth, because when a business is growing really, really fast, it's a more difficult game. It's a more difficult because you're betting on the continuation of that strong revenue growth, and nothing grows to the sky. No business since the dawn of time ever goes to the sky. It reaches the optimization period, but no business ever grows to the sky. So as a growth investor, that's difficult. And as let's say when the business is growing slower, it's slightly easier. What you're doing in that case is you're making a different type of bet. You're making a bet that the business is still going to be around for a few years. And that's really, really interesting, because if the business is cutting its way aggressively to making free cash flow, provided the business can stay around, you can get some quite nice money, because the business goes from people's perception being, hey, this is another unprofitable, quote unquote, SaaS business. Nobody cares about it, blah, blah, blah. It's dead in the water, negative growth rates, blah, blah. And then you kind of say, actually what's going to happen here, you have one more quarter ahead with some bad luck. So you have to wait 90 days. And then once you go over that 90-day period, slowly the outlook starts to improve. And that can be rather interesting, but you can't time that perfectly. So you have to get in a bit before that. With Sentinel-1, I strongly believe that by this summer it's going to hit $40 a share. And I know that I've been saying this for such a long time, but I believe this with all my might. I will. I know it's 22 now, and I know all the negatives with it, that people just don't see how they're going to become so profitable. But there's so much to like. They're already on the cusp of breaking even. So what happened was last quarter. So not the quarter just reported. Their fiscal year is misaligned. So I'm just going to talk about not the quarter just reported. The quarter before that, they had a lot of free cash flow, and then as they went into the end of the year, which was fiscal Q4 2025 for them, their free cash flow kind of dipped down because they just kind of said, okay, we got ahead of ourselves. We're going to just dip down, reinvest that cash flow so that the next year we can have some growth with stronger free cash flow. And the market's like, we don't care about you. And I get it. They're perceived to be like a tier 2 player versus CrowdStrike, but they're not. They're just smaller. They're already hitting right now 1 billion in revenues. There's not a lot of software companies that are a billion, like doesn't sound like much, but 1 billion in revenues is a lot. Trust me on that. And 1 billion in revenue are growing at close, let's say 28%. That's really, really good. So yeah, I feel that I'm going to sell this at 40. I really believe in the next 6 months. So yeah, I hope that answers your question.
Okay. Yeah, I was just wondering because I thought the story was last year because of the thing that happened with CrowdStrike. People,
I've actually owned Sentinel before CrowdStrike. I've owned that before CrowdStrike by about 6 months. It was nothing to do that. That was like a little icing on the cake that that came around. But you have to remember when you contract a cybersecurity company, generally speaking, you contract for about 5 years. Okay, so even if that incident happens, people are still contracted for 5 years. So it's not that next morning they're like, oh, I'm going to sell all my engineers that use CrowdStrike and I'm going to hire new people. You have to kind of delete all that operating system and you have to cancel the contract. So it will happen, but it's not like people expect it. People expect it to be the next morning. That everyone's just gonna. But why would they? If you're paying CrowdStrike and you contracted for 5 years, you're not going to just say, oh, like when you update your operating systems, then you'll change. But it takes time. But that's not important for the thesis. That is not that is like some icing on the cake. That may happen or may not, but that's not really what the thesis is about.
How you don't think about it, or it's just a little part of the equation for you. Yeah.
Minor at 5%.
Okay.
That's not what the game is at. The game is at, can they convince investors that at Q4 of this year, so it'll be in October this year, can they convince investors they're going to be on a run rate of 100 million of free cash flow? Now, a run rate, I don't know if you're familiar with that term, just means annualized. So if you look at, let's say, one quarter, 90 days, you times it by 4, then you got a year. So software business is always about looking forward, okay? So when you see, the annual reported revenues or ARR of this business, people are just extrapolating that forward, and you just look at that quarter and you times it by 4. So essentially what I'm saying is they will make 25 million of free cash flow in Q4 of this year. And I think they're going to hit that. I'm very much convinced, but you have to convince the market. That's the difference. That kind of answers that question.
Thank you so much.
Yeah, sure. So there was a question, how many years ago did DVR start? So I'm not going to lie, I think it was around 2019 I started. And it was only when Tomas said to me in I think it was July 2023, he said, oh, I like the way that you invest, but can you make it clearer for me so that I can see the performance in a really clear and easy way to explain? And I said, okay, I'm going to do that for you starting 2024. And I never thought that this one thing, and in fact, I'm not sure if this person is even on the call. It's not even me that does it; it's Vasilis that does it. I like he set this spreadsheet up, and basically everyone's like, "Oh, like your performance is really good." No, the performance was always the same. It's just that people couldn't see it. And Vasilis made the spreadsheet, and it's like people were like, "Oh my god!" And like so, yeah. To answer your question, is the yeah, that's the only subscription service. Yeah. Okay. Is there any other questions, or can we wrap up here?
Hi, Michael. I have a quick question.
Sure.
Hi, this is Saul. I'm a new member for about a month. Happy New Year to everyone. I agree with the decision, your decision to sell CRNC. Obviously, massive upswing. So the question, I think, because I think I recall someone saying, I think it was you, said that you were going to wait until earnings.
Yeah. So you asked me this, and I explained. So when you asked me that question, the share price was approximately $12.30.
Right.
$12.30. I'm like, okay, I'm not going. I don't need to react to this share price, and that's the way I will say to anyone that will listen to me: do not react to the share price. React to the earning results. Do not react to the share price. But I wrote that message, and I did, like that was it. You don't need to react to the share price every day. But between that being written and Friday night, so between in those, let's say 4 hours later, it had gone from that point up another 50%. I was like, forget it, man. It's like, it's not a great company. It's not a net. It's like forget it. It's like, I'll find something else. I know I'll find something else. I don't know how long you've been on the service, but and this is something that people have to get used to. When I say I'll find something else, I will find something else. Might take 3 weeks, might take 4 weeks, but you can be assured. And I don't know, like again, when you start the service, but I'm actually got space in the portfolio for free stock. So 2 or 3, we'll see how many I'll pick. But yeah, I will find something else. I have absolutely.
Yeah, I've been in the service for about a month. I know we only have like 2.5 minutes left.
Right.
But can you just, if you could, briefly speak about your relationship to the earnings report? I know I've read most of the things that you've written, but could you briefly address that here? That'd be appreciated.
My relationship with earnings report.
Waiting, like the importance of earnings reports.
Oh yeah, this is gold. Like everything else is noise. Everything. Like the share price going up. Listen, the share price can be going up and up and up into the earnings. The earnings come out and that can be completely obliterated, and vice versa. It can be going down and down and down. Earnings will come out and the share goes up. So the earnings report is the gold. That's where you make the money. You need to kind of go through that and have a vague idea of the progress the company is making.
Okay, thank you.
I have a question. I'm sorry, I'm missing the hand raising button.
That's fine. That's fine.
Do you also a month like Saul? Do you do anything with regard to like breadth? Like I like a couple of retail stocks that I've followed over the years, and like I'm invested in one now, for example, and it's like I get the feeling just getting into the new year off the last month that retail is not like the place to be. And I know it brings to mind that you do not mention retail in the group description. So do you have any views?
I always look at idiosyncratic, specific company doing specific things. I don't make bold macro calls. Oh, retail's going to do this or that, because that sounds awesome. Like a person can sound really hot doing so, but in reality, it's a much more difficult game. It's much easier to pick out an individual company and have some expectation of where the narrative could go than picking out, I think retail's going to do X, Y, Z.
Thank you, sir. David Hoffman, by the way.
Thank you so much. Thank you, David. Okay. Thank you very much, everyone. And I'll see you next Tuesday at the same time, 10 a.m. next Tuesday. Thank you so much.
Thank you so much, Michael.
Thank you, Michael.